US stocks declined on Wall Street on Wednesday after data showed that the US economy expanded at a healthy pace, which drove the traders to trim their bets on rate cuts by the US Federal Reserve. Technology companies' stock weighed on US stock after disappointing numbers from mega companies. The US economy maintained a solid pace of growth in the third quarter as receding inflation and strong wage gains powered consumer spending ahead of a contentious presidential election. Gross domestic product increased at a 2.8% annualized rate last quarter, the Commerce Department's Bureau of Economic Analysis said in its advance estimate of third quarter GDP. US private payroll growth surged by a higher-than-expected 233,000 jobs in October 2024. China's official Manufacturing Purchasing Managers Index, PMI, rose to 50.1 in October, compared to 49.8 in the previous reading. The NBS non-manufacturing PMI improved to 50.2 in October versus September's 50.0 figure and the estimates of 50.4. Asian equities fell Thursday after US stocks and government bonds dropped as robust economic data blurred the picture for imminent Federal Reserve rate cuts and as investors looked to the Bank of Japan's rate decision. India's 8 core sectors saw modest growth in September, led by refinery and cement. The combined index of 8 core industries grew by 2% in September, according to data released by the Ministry of Commerce and Industry on Wednesday. This compares to a contraction of 1.6% in August, which marked the first decline in 42 months. The union government's fiscal deficit expanded to 29.4% of the budgetary target at the end of the first 6 months for the financial year ending March 2025. Nifty closed lower on 30th October after a 2-day gain. A sell-off post 1300 HRS erased the morning gains as the star performers of the previous 2 days, i.e. banks, came under profit-taking. Nifty closed near the opening level and the intraday low on 30th October as higher values attracted profit-taking. 24,500 is proving to be a tough resistance for the Nifty. Nifty could now stay in the 24,074 to 24,500 band for the near term, and the breach of either level could decide its future direction.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.